Welcome to a new video on 505 standard, which deals with direct written responses to the auditor. Four general areas where this works for audit evidence is confirmation of balances, say bank balance, loan balance, debtor creditor balance, or stock value with third parties, say a warehouse, or even terms of transaction between an audit entity and another party. Ask yourself three basic questions while sending external confirmation requests: what, whom, and how exactly to request. Number one, what is it that is actually to be confirmed? You may want to confirm a ledger balance, say a creditor is owed X amount of money, or you may even want to confirm the terms of a particular transaction, say terms of payment. Number two, whom to send the request to? Very important. You don't want to send the debtor's confirmation request to the customer's production department. Confirming party must have knowledge of the information to be confirmed. Then it would be proper evidence. Number 3. How exactly is the confirmation request to be designed? It is how you would expect a letter to confirm some fact you know. It should have been addressed to you and you should be requested to respond to the auditor directly. Auditor may send a follow-up request if some response is not received. When there is a mismatch, it is referred to as an exception in the 505 standard. But just because there is a mismatch doesn't mean that there is a misstatement. Sometimes financial position is correct only if there is a mismatch. Now, a confirmation request may or may not get any response from the confirming party. If they do respond to the auditor, just consider whether the response can be relied upon. If there is some doubt about reliability, then confirm the doubts and then consider whether something else to be done to get evidence. If third party does not respond itself, then you are left with no other option but to do something else and get evidence. If nothing else is possible and external confirmation is the only possible evidence, then it will impact the final audit opinion that is given. This is a summary. You may save the video or screenshot this if you like. Okay, sometimes management blocks the auditor to talk to third parties to get external confirmations. Then understand why the management is doing that, if it is valid or not. Like if there is some dispute already going on, for example, and if auditor goes and asks for a balance confirmation, the third party will be more annoyed. Consider what is the impact of not getting confirmations. Does it increase the risk of financial statements being misstated? Should other audit procedures be increased? And of course, if confirmations are not available, auditor will try and do something else to get evidence, like checking GST returns, filings. If management is giving some unreasonable excuses and no valid reasons, then directly speak to higher authority, that is TCWG. And then the same thing, consider the impact of not getting confirmations on misstatements. Additionally, this may also impact the audit opinion if management is giving some unreasonable excuse. Auditor may give a disclaimer opinion if it is appropriate. The last item, there are two types of confirmation requests. Basically, one that requests response only if there's a disagreement. The second one which requests response in any case, whether yes they agree with the balance or no they don't agree with the balance, both. The first one is called a negative confirmation request. Obviously, a negative confirmation request is a lower level of assurance. Third party may not respond even if there is a mismatch. So the standard is to issue such a request only when there is a low level of risk and the recipient would not have any reason to ignore the request. Also, such requests are concerned with same type of items, homogeneous, that is, say 30,000 rupees receivable from 30 different customers, and there would be a very low exception rate.